Hello, welcome back guys. In this video we are taking a look at Alibaba and what has been going on right now in the markets, where the stock is actually up almost 12%. You will see over here it's approaching the $80 mark in the pre-market trading hours. Now in about 3 hours the market is going to open. We see where this is going to end up, but it's probably going to be a pretty green day. Now we will examine in this video what is going on right now in China, because a lot of stocks are actually up right now, like Tencent was up as well. I'm pretty sure a lot of other stocks. A lot of work for me to do today, I suppose. Probably a few more videos coming your way, because there is a lot of interesting news, including Warren Buffett buying new stocks and Michael Berry buying new stocks. So stay tuned. But for this one, let's take a look at what happened here. Alibaba 10-cent gain in China rallied despite gloomy economic data. Now, we do know about the gloomy economic data in terms of China. This is not a new thing, of course. It has been going on for a while right now, and it's expected. And so right now Alibaba and Tencent are up significantly. Don't look at these values because in the pre-market they are up significantly. Led the Chinese technology stock rally on Tuesday as the market surged on hopes of stimulus and changed the COVID-19 policies. Now I hope the stimulus doesn't really happen because it's extremely inflationary, despite the latest data showing China's economic activity largely cooling in October. So the American depository receipts, that's the ADRs, were up 11%, right now closer to 12%. And the same thing with Tencent, JD also up like 8%. So we'll see where this is going to head later. But you will see here that, again, it's what we kind of talked about with a little bit more detail. Like Chinese markets were up more broadly, with Hong Kong Hang Seng closing up 4.1%. And of course, we are looking at the releasing some of the COVID-19 restrictions, as well as the face-to-face meeting between Biden and Xi Jinping, which I guess they kind of agreed not to take the war into a nuclear war. I guess that's a good thing, I suppose. But optimism reigned despite data showing retail sales fell 0.5% in October from a year earlier. Again, something to be expected with all the lockdowns and the supply chain issues. However, online retail sales of physical goods rose 7.2%, surprising, frankly, in the first 10 months of the year, beating the 6.1% rise in the January to September period. And the industrial production in China rose 5%, slowing from September's 6.3% growth. Now I'm going to take a little bit of a look at Alibaba's price because a lot of people actually have been leaving comments about this one. It's been a while since we talked about it, so I will take a little bit of a closer look in this video as well. Or a little bit of a refresh, pretty much. If you haven't watched any of my previous videos about the evaluation of the company, you will see here that the price to earnings ratio is elevated because we do know that the company has been losing some net income due to basically a lot of investments that went south, and of course the COVID lockdowns, pretty much the supply chain issues. The whole economy was actually put on a strain hold, so this is why you're looking at a lesser net income here. Yet the price to free cash flow is still super low over here, sitting at 8.5. With the company buying back shares and also continuing to buy back shares in the upcoming quarter, which is a nice thing, upcoming quarters that is. And of course, we talked about the net income going down for a little while, and it's probably expected to happen in the next few quarters. But overall, the company is definitely expected to go back to its previous growth levels eventually. Now, of course, all the other metrics are pretty nice, apart maybe from the net income margins, which have been going down again because of the fact that net income has been declining. Again, not to be expected. This is not the normal net income that the company generates. It's probably more like a temporary thing till things get sorted out with the overall economy over there. Now, we have talked again about the financial statements of this company, which is insane. If you take a look at the revenues that the company has been generated back in 2018, the company was doing like 40 billion in revenue, and the stock price was like $200 or something. And right now it's doing $135 in revenue, and the stock price is like $80, or at least it will be $80 when the market opens up later. And the same thing with the net income from 10 billion to this is 10, but remember the previous year 23. Again, this is a year that was the odd one out because of the issues that happened with China and the overall China pretty much. And it's not expected to continue in the upcoming years, not even close. And this is why it's a pretty nice opportunity, I feel. And same thing as you'll see here with the assets of the company. Increasing their assets while buying back shares is what's going on here. And you will see that the company had the total equity of 70 billion back in 2018, very nicely increasing their overall assets here to 171. which is more than doubling it, pretty much more than doubling it. So pretty tremendous stuff over here, almost 3 times. And same thing with the cash flow statement. Again, it's only the last year that was a little bit of the odd one out. But overall, you will see that the company has been increasing their operating cash flow over here. Again, last year, it's because of the net income wasn't that great. But the free cash flow, 15 billion, 15 over here, 19, 28, and 22.5 over here, a little bit of a decline. And if we take a look at our stock evaluation tool, it can kind of give us an idea of what to buy the company for. And people, again, have been asking me to take a little bit of a fresh look here. And you will see that the company's revenue growth has been tremendous over the years. But in this calculation, we're going to go much, much more conservative than what they have been doing in the past. So I'm going to be using something that's much less than the averages that they have been generating. I'm going to go, let's just go 7, 9, and 11 here. So net income margin, typically the company does something near 20%. Last year was a terrible year for them, and last few quarters haven't been great, of course, so the margins have been going down. But it's not representative to be using these kinds of margins for the next 5 years. It's not going to happen. So I will be using something that is maybe a little bit less than 20%, just to be safe, even though the company has been generating more than 20% for the most part. I still will be using something like, let's just go 17, 18, and 19 here. Let's just say that they have some declining margins over the next few years. I think this is probably going to be better overall, but still, let's just go with that. The free cash flow margin that I'm going to use, again, the company has been nearing maybe 100, something near that level. So I will go 80, 90, and 100 here, also being a little bit more conservative, not overdoing it, even though the company has been doing margins that are more than 100% typically. And annual return of 13%, very typical, one that I'm using pretty much in most of my videos. It basically denotes that I want to be getting 13% out of my investment, that is annually, that is the profit that I want to be generating. And the discounted cash flow model will tell me what's the price to buy the company for today. And you will see that with the current price being at 71, these are the valuations. These are the results that I'm getting for the price to buy today. And we are looking at our low estimates with a revenue growth of 7%, net income margin of 17%, free cash flow margin of 80%, and an annual return of 30%. We're looking at $123. And again, the stock price today is probably at 80 bucks over here, not 71 right now. Yet you will see that the medium ones are 160 and the high ones 203. And I frankly believe that the price that Alibaba is worth buying for today is probably near these two values, I would say. Maybe even the medium one. It does make some sense. But I do think this basically implies that the company stock price is extremely cheap right now. That's what I feel. And this is why I have bought quite some Alibaba actually, as the stock price has been going down. Now, will this continue to happen, the movement that we are seeing right now? Maybe not. Maybe it will have a little bit of a rest, because it has been going up quite significantly, Alibaba, lately. Like if you take a look at the 1 month chart over here, or the 1 week chart or something, you will see that we have been having some very, very trending days pretty much here for the company. And you will see, let's just go 3 months, you will see that lately we have been having some upwards movement. Yeah, we did have a little bit of a decline here, but then now we're getting to, like, from $64 over here, 64.84, we're going to near 80 right now. So this is a pretty significant move, maybe like 25%, something of that sort. So we'll see what's going to happen, of course, when the market opens, but we're probably looking at least a 12% gain today, it looks like, unless, it somehow it declines through the day, maybe. That's also a possibility. But overall, this is a company that has been having some fantastic financials, and it's only the news pretty much that have been taking it down. It's the economic data, the things that we have talked about in the past. You can kind of see it here in the news module of our tool for Alibaba that is dedicated to Alibaba over here. You will see what investors are looking here, pretty much signs of reopening in China, for example. With the titles, it's just easy to see. Now, a strong buy, I do believe that as well. So I do think that it may be a good time to actually start accumulating if you haven't already. And there have been quite a few times that it was really, really worth it accumulating the company, I feel. But we'll see what's going to be happening in the upcoming quarters. As usual, we're expecting for the earnings report. I believe it is tomorrow or the day after, something of that sort. I will check it actually. I will stay tuned. But we will be expecting to see what's going to be happening with after the earnings report. You can kind of see it here, November 17th, so it is in 2 days. And yeah, I will definitely be making a video and let you know what's going to be happening with the company. So stay tuned, and I'll see you soon. Bye-bye.